You have been selected for a tax audit. Please prepare all financial documents for the review. What does this even mean? This sounds serious. Hello, Miss Alice.
Hello.
I'm not busy, but I received a letter about a tax audit and I don't even know where to start.
Okay, calm down, Miss Elia. A tax audit is a routine process. Do you have your invoices, receipts, and tax returns organized?
Some are here, but others I'm not so sure.
Okay, alright, it's okay. Don't worry, I will guide you through this. Gather what you can, and I will help you prepare before the auditor arrives.
Alright, thank you so
Yeah.
much. I'll see you
Alright,
soon.
alright.
Okay, bye.
Okay, Miss Elia. Let's start with your incoming cards. Do you have proof of all your sales?
I record most of them. Maybe except a few cash sales because I thought the small amounts didn't matter.
Every sales matters, Elia. The auditor will check for undeclared income. So let's focus on being honest and transparent.
Okay, so how about expenses? I do claim for my phone, my laptop, and also my car.
Are they 100% for business?
Maybe not the car. I use it for personal trips too.
Then you will need to adjust them. We can explain this during the audit.
Good morning. Sorry for keeping you waiting. I'm Shaza, the auditor assigned to your case. Shall we begin? Okay, let's start with your income records.
Here it is.
Thank you. Okay, according to your tax return, you reported 100,000 last year. Is this accurate?
Yes, but I may have missed a few cash sales.
Actually, we have reviewed the records and identified the missing amounts. Miss Elia is ready to declare them now.
Thank you for being honest. Now let's move to your expenses. You claimed 20,000 for vehicle maintenance. Can you explain?
Well, I use my car for business trips.
Exclusively for business?
Well, not entirely. I use the car maybe 70% for business and 30% for personal use.
Then you can only claim the business portion. Let's calculate it.
For vehicle expenses, Elia claimed 20,000, which is 100% of vehicle expenses. She used the car 30% for personal use and 70% for business use. Here's how it works. We will take the total expense and multiply it by the percentage used for business. The total expense are 20,000 and the percentage is 70%. So we got the claimable vehicle expenses, which is 14,000.
So Elia, you can only claim 14,000 as a deductible expense and the remaining 6,000 is personal use and cannot be claimed.
Got it. I will adjust my records immediately.
Thank you for clarifying, Ms. Shaza. This is a good example for Miss Elia to remember in the future.
Good morning, everyone. I'm Puan Farah, overseeing this audit to ensure everything is fair and compliant with tax regulation. So, how is it going so far, Ms. Shaza?
We have identified some discrepancies such as undeclared income and overstated vehicle expenses. We are working through the calculation now.
That's a good start. Elia, as a taxpayer, do you understand why these issues are being raised?
I think so. It's because I didn't separate business and personal expenses properly. And I also missed reporting some income.
Exactly. Keeping accurate records and ensuring that your claims are legitimate is crucial. Failing to do so can lead to penalties or interest charges.
Point Farah, could you please explain how penalties are being calculated if discrepancies are found? I believe this will help Miss Elia to understand the importance of compliance.
Of course. So, if you underreport your income or overclaim deduction, the tax authority can impose penalties of up to 45% of additional tax owed, depending on the severity. In Miss Elia's case, since she's cooperating and this seems unintentional, penalties may be lighter.
Wow! I had no idea the penalties could be so high. I'll make sure this doesn't happen ever again.
That's a great attitude, Miss Elia. So make sure you always consult a professional like Miss Anis if you are unsure about your records.
Miss Elia, you claimed 5,000 for entertainment expense. Can you clarify what these were for?
The 5,000 is for client meetings at restaurants.
Alright, but keep in mind, only 50% of entertainment expenses are deductible. This to prevent abuse of such claim.
Miss Elia, let me explain why this rule exists. Entertainment expenses often overlap with personal spending, so only half is deductible to ensure fairness. For instance, if you take a client out for dinner, part of that cost might benefit you personally, right?
Ah, that makes sense. I wasn't aware of that rule before.
Let's calculate the deductible amount.
The total expense is RM5,000. Deductible entertainment expense are 5,000 multiplied by 50% and we got the amount of 2,500 ringgit. Please keep in mind only 50% of entertainment expenses are deductible.
So Elia, you can only claim 2,500. This is why it is important to stay updated on tax regulation.
Thank you, Farah. I'll make sure to adjust my claims and records accordingly.
Elia, before we wrap up, let me share some tips to avoid this issue in the future. First, use a separate account. Keep your personal and business transactions in separate bank accounts, so this will make it easier to track your expenses. Next, maintain a digital ledger. So record every transaction in the digital system. It less prone to errors and easier to review during audits. And the last one, review tax rules annually. Tax regulation can change, so make it a habit to review them or consult Ms. Anis for updates.
Those are great suggestions. I've been relying on handwritten notes and it's clear I need a better system.
I will help you to set up a bookkeeping software, Miss Elia. It will streamline everything and ensure the compliance.
That's a smart move. Organized record can make audit like this stress-free.
Exactly. Remember, a tax audit is not meant to punish you, it's to ensure fairness in tax system. So by staying organized, you can avoid mistakes and even save money in the long run.
Miss Elia, based on the correction, you owe an additional 7,000 in taxes. However, because of your cooperation, no penalties will be applied this time.
Thank you for being understanding. This was a great learning experience for me. I'm glad to see you are taking seriously, Miss Elia. Tax compliance is not just a legal obligation, it's also about contributing to the development of our country.
Miss Elia, we will work together to ensure this doesn't happen again. With better practices, you will avoid these issues in the future.
Thank you, everyone. I've learned so much today. So what have I learned from this tax audit? First, always keep detailed and accurate records of your income and expenses. Forgetting to declare even a small amount of cash sales can lead to trouble later.
That's right, Miss Elia. Transparency is essential during a tax audit. Taxpayers should be honest and cooperative when dealing with auditors. This makes the process smoother and avoids unnecessary penalties.
Don't forget the importance of separating personal and business expenses. Claiming 100% for something like your car or entertainment when it's partially personal is not allowed. Always allocate accurately.
And lastly, don't panic if you are audited. A tax audit is not punishment. It's a routine review to ensure compliance. Seek professional advice where necessary and use the experience to improve your tax practice.
Thanks to this process, I now understand the importance of proper bookkeeping, following the rules. I'll definitely do better moving forward.
Remember, staying organized and compliant helps everyone, tax auditors and taxpayers alike.
And if you ever need help, consult a professional to guide you through the process.
With proper preparation and honest practices, tax audits don't have to be stressful. Thank you for listening, and we hope you have learned something valuable today.
Hey, wait! Before we conclude, let's summarize what we've covered today and explain the key points of a tax audit for everyone's understanding.
This audit is a compliant audit, previously known as a tax audit. It involves the review of documents and records submitted by the taxpayer to ensure they comply with the Income Tax Act 1967.
That's right. Unlike a compliance verification audit, which include on-site visit to the taxpayer's business premises, a compliance audit is conducted in a formal office setting through document analysis.
So the process involves first notification. The taxpayer receives an official audit letter specifying the audit scope and required documents. And the second one is document review. We analyze records like financial statement and invoices for discrepancies.
The third one, discussion and clarification. Taxpayers are given the chance to explain inconsistencies or errors. And the fourth one, adjustments. Based on findings, we calculate any additional tax owed or overclaim deductions.
So, as for penalties, let's clarify those two. Under reporting income, this can result in penalties up to 45% of the additional tax owed. So, for overclaiming deductions, similar penalties may apply if claims are found to be inaccurate or fraudulent.
Lastly is non-cooperation. Failing to comply with audit requests can lead to even higher penalties, and in extreme cases, legal actions.
I see now how serious these matters are. I'll ensure my records are accurate and organized going forward.
This has been a productive session. Miss Elia, thank you for your cooperation.
That's all from us. Thank you!